What if I told you that the world's most powerful company right now, the one driving every single dream of artificial intelligence and automation, isn't really a tech company at all? What if Nvidia, the titan of Silicon Valley, is actually a financial illusion built on leverage, liquidity, and deception? Everyone's talking about AI chips, robots, and the future. But almost nobody is asking the one question that actually matters. How did a chip company become worth more than the entire economy of Germany in just 2 years? The secret is that Nvidia's rise isn't just about innovation, it's about hidden financial engineering. A secret feedback loop between Wall Street algorithms, Federal Reserve money printing, and the world's desperate hunger for AI hope. And the same system that made Nvidia seem unstoppable could be the very thing that collapses the entire AI economy overnight. Before we dive deeper, tell me in the comments where you're watching from. Because what's happening here doesn't just affect America, it affects every country tied to the dollar. Make sure you're subscribed because this channel is where we expose the unfiltered truth they don't want you to know. By the end of this video, you'll realize Nvidia isn't just a company. It's a mirror of the modern illusion we all live inside. To really understand Nvidia's story, you have to go back, not to Silicon Valley, but to Wall Street in 1999. Back then, the internet was the next big thing. Dot-com fever ruled the markets. Companies with no revenue were suddenly worth billions. Analysts kept saying, "It's different this time." Cisco, Yahoo, AOL, they were the gods of the new digital age. And just like Nvidia today, their valuations exploded far beyond any logic. But when that bubble popped in 2000, trillions in paper wealth vanished overnight. And yet, Wall Street learned a lesson, not to stop, but to simply recycle the illusion. Every decade, a new story would replace the old one. First, it was the internet. Then it was housing. Then came crypto. And now, it's AI. Each time, the narrative was exactly the same. This will change everything. This time is different. The future justifies the price. And each time, the pattern repeated, leading to the next inevitable collapse. Nvidia's meteoric rise follows that exact playbook. After the 2020 pandemic, the Federal Reserve printed over $8 trillion to save the economy. That money had to go somewhere, and it flooded straight into risk assets, tech stocks, crypto, and of course, AI. Investors weren't betting on products, they were betting on stories. And Nvidia, with its AI chips and data center dominance, became the defining story of the decade. Let's look at the numbers. Between 2022 and 2025, Nvidia's revenue rose about 250%. That's impressive, right? But its market cap rose an astonishing 200%. That's 5 times faster than its actual business growth. That's not innovation, that is monetary distortion. It's the same thing that happened with real estate in 2008, and before that, with internet stocks in 2000. The pattern is crystal clear. When cheap money floods the system, Wall Street builds an idol, and this time, that idol's name is Nvidia. But here's the question no one dares to ask. Who's really behind this? Who benefits when one single company becomes the world's financial anchor? Because Nvidia's rise didn't just happen by chance. It was engineered by algorithms, hedge funds, and central banks all playing the same game. And that game has a name. It's called a synthetic liquidity feedback loop. Here's how it works. Every time Nvidia's stock price goes up, big index funds like the ones managed by BlackRock and Vanguard, which control over $25 trillion combined, are forced to buy more shares. Because Nvidia's weight inside the S&P 500 increases, and their funds have to track that index. That automated buying drives the price even higher, which forces them to buy even more. It's a vicious cycle, and the higher it climbs, the more everyday retail investors jump in, believing the stock is unstoppable. Then you add options traders to the mix. Every time traders buy Nvidia call options, the market makers who sell those options have to hedge their position by buying actual Nvidia shares. That extra demand pushes the price even higher, triggering the same loop all over again. It's a self-feeding machine that prints artificial growth. On paper, Nvidia looks invincible, but underneath, it's a liquidity trap, a bubble inflated by leverage and pure belief. And who built this system? The same entity that has been quietly shaping every major bubble for a century, the Federal Reserve. You won't believe the role they played in creating this illusion. It goes far deeper than just interest rates or stock buybacks. It involves synthetic liquidity, derivative recycling, and AI market algorithms that are now running the show. Ever wondered how a single stock became the most talked about, most traded, and possibly most dangerous asset in the world? Let's unravel the story of Nvidia, because it's not just about AI, it's about a financial system teetering on the edge. It all started after the 2020 crash. The Federal Reserve, in an unprecedented move, printed nearly $4.6 trillion. This massive flood of cheap money had to go somewhere, and it forced investors into riskier assets. Anything with a compelling story. Tech stocks, with their high growth and the dazzling promise of an AI revolution, became the perfect destination. But it wasn't just individual investors. Corporations jumped into the frenzy. They issued debt at practically zero interest and used that money to fund over $3 trillion in stock buybacks. This artificially inflated their own stock prices, creating a powerful illusion of soaring demand. Valuations shot through the roof. At the same time, something was happening quietly in the background: the rise of passive investing. Today, index funds control a staggering 64% of all U.S. stocks. This is crucial. When someone invests in a popular S&P 500 ETF, a portion of that money automatically goes into buying Nvidia stock, regardless of its price. This isn't market logic, it's algorithmic obligation. So, as this tsunami of liquidity poured into the market, the same three giants, BlackRock, Vanguard, and State Street, kept buying more and more Nvidia, not necessarily because they thought it was a great deal, but because the system itself demanded it. The stock became a must-own asset driven by automated flows. Then, you add the wild world of option speculation into the mix. In 2023 alone, the notional value of options traded on Nvidia hit an unbelievable $900 billion. That's more than its entire market cap at the time. Each trade, each bet, added fuel to the fire, creating the illusion of unstoppable growth. Every illusion, in turn, attracted new money. And just like that, a self-reinforcing monster was born. It's the perfect storm of automated investing and human greed. A casino wrapped inside a supercomputer, all disguised as a technological revolution. Now here's the part that most people miss. Nvidia's valuation isn't just tied to its innovation anymore, it's directly tied to global liquidity flows. Think about it. When the Fed signals it will tighten monetary policy, Nvidia's stock drops. When they hint at loosening, it soars. This isn't the behavior of a company driven by innovation. It's the behavior of an asset addicted to cheap money. Let's put some numbers into perspective to see how wild this has become. Nvidia's valuation has flirted with the $5 trillion mark. Its annual revenue? Around $80 billion. That gives it a price-to-sales ratio of over 60, higher than any mega-cap company in history. The daily trading volume often exceeds $30 billion. Meanwhile, since 2023, company executives have cashed out over $12 billion in stock. Now consider the systemic risk. If Nvidia's stock were to fall by just 20%, over $1 trillion in collateral would instantly evaporate from global balance sheets. This would trigger forced selling across a wide range of funds, ETFs, and even pension plans. It could create a cascade collapse eerily similar to what we saw in 2008. Because remember, this isn't just about one company's stock. It has become the anchor for the entire AI narrative that's propping up Wall Street's illusion of growth. In the same way that mortgage-backed securities were the linchpin of the 2008 bubble, Nvidia is becoming the collateral for a potential 2025 AI bubble. And just like before, The very elites who inflated it will likely be the first to cash out before it pops. Every financial empire throughout history needs a golden idol to keep the public believing. In 1637, it was tulip bulbs. In 1720, it was the South Sea Company. In 1999, it was dot-coms. Today, in 2025, many argue it's Nvidia. And each time, the same familiar phrases echo through the markets. This time, it's different. This is the future. It can't possibly go down. Does any of that sound familiar? History doesn't repeat itself, but it often rhymes in profits and losses. And just like every cycle that came before, the truth comes crashing down the moment the liquidity, the cheap money, dries up. So the real question isn't if a bubble around Nvidia pops, but when. And when it does, it won't just take down one company.
It will force a rewarding of what the world believes about technology markets and the very nature of money itself. It might not happen today, and it might not happen next month. The system is running out of narrative system. The Freedom Reserve can't print infinity money without eventually destroying the dollar.
And Wall Street can't stop its automated buying without breaking its own reflection in the market. We have built an entire economy on borrowed time, powered by belief and leverage. Nvidia's incredible story is simply the mirror showing us exactly how fragile it all is. The real danger isn't the collapse itself, it's the denial that precedes it. Because when the headlines finally hit, they will inevitably say, "No one could have seen this coming." But you did. You saw the pattern. You saw the liquidity flows, the illusion of demand, and the faith-based economics driving it all. So ask yourself, are we truly wiser this time around, or are we just walking the same old path, just in better-looking suits? If you believe people deserve to understand the truth before the next potential collapse, please share this video. Awareness is the only form of wealth they can't take from you. And if you haven't yet, hit that subscribe button. This is the channel where we decode the hidden side of finance, one secret at a time. Stay awake, stay skeptical, and remember, in an age of illusion, the truth is the most valuable asset you can own. Thanks for watching.